Welcome to Alex's Financial Insight Show. This channel is engaged in an in-depth financial and stock price analysis of selected companies and predicts future trends. Today's presentation is about Intel Corporation. Intel is selected due to its current financial situation. Let's see brief background about Intel Corporation. Intel is renowned for its semiconductor products, which includes microprocessors and chipsets. It has expanded its focus to include technologies such as 5G, AI, and cloud computing. So what are the issues? The issues are that Intel has faced a challenge at the moment, and below are the challenges that encountered. One is a market competition from rival companies like Taiwan Semiconductor Manufacturing, Advanced Micro Device, Qualcomm, and IBM. In addition to market competition, Intel also missed technological transition in some areas. And this is because Intel's management focused on financial strategies than advancement of technologies. And obviously, this has impacted its standing in semiconductor industry, has affected its competitiveness, and the company's stock price is declining now. Currently, there is also a change in management, specifically in CEO. We are not sure who will permanently replace the CEO who have left. In the below section, I will present trends of key financial ratios, correlation among the stock price and key financial indicators. The trend analysis is based on data from Q1 of 2021 through Q3 of 2024. First, let us look at the trend of average quarterly adjusted stock prices. As you can see, the stock price gradually declined until Q4 of 2022, and then it recovered until Q1 of 2024, after which it continuously declining, seeing like Q2 of 2024, 2023, the stock price is still going down. So just to recap, the graph shows that the company's stock price gradually declined and bottomed around Q4 of 2022. Then the stock price recovered until Q1 of 2024 and started falling after that. And this graph is about gross profit margin, operating margin, and earnings per share. The blue bar chart shows gross profit margin. The orange bar chart is for operating margin, while the green line is for earnings per share. As you can see, gross profit margin and earnings per share are positive, but they were declining over the years. Similarly, the cash flow, or basically the earnings per share, is declining over the years, specifically after Q1 of 2024 is going down. So just to recap, the graph shows that both operating and gross profit margins have been in the positive territory, but have declined over time. The earnings per share declined mainly after Q1 of 2024. This graph is about cash flow, capital expenditures, and research and development spending. The blue bar chart is cash flow, the orange bar chart is capital expenditures, and the green line is research and development spending. Okay, as you can see, the capital expenditures and research and development spending are pretty much stable over the years, despite the challenges that we saw. Okay, the cash flow is fluctuating, as you can see from the blue bar chart. So to recap, the graph tells us that despite a gradual decline in the operating and the gross profit margin, the company's spending on research and development and capital expenditure has stayed robust over the years. So now let's see trends of some key balance sheet ratios. So this graph is about current ratio, quick ratio, and debt ratio. Okay, current ratio is current asset divided by current liability. Quick ratio is current asset minus inventory divided by current liability, and debt ratio is the company's total debt divided by the total asset. So now, as you can see, the current ratio and quick ratio are in a positive territory still, but are declining over the years, while the debt ratio is stable and low. It is low and the stable. Debt ratio is low and stable. So just the graph basically shows us that the company's debt ratio stays stable over the years. Current and quick ratios are in the positive territory, so they appear to decline over time. Then to take the thing further, I conducted a multivariable regression, and I used external and internal variables as dependent variables. And this is basically to see which factors significantly correlated with the change in the stock price. ARIMA model is used. ARIMA is autoregressive integrated moving average. And data used for the regression covers the period from quarter 3 of 1989 through quarter 2 of 2024. And regression results are presented in the next slide. So as you can see, my explanatory variables or independent variables are log GDP, log stock volume, current ratio, quick ratio, CPI, and basic earning per share, and the ARIMA parameters, which are selected basically based on the fitness of the data. GDP and CPI are obviously external factors, while the other variables are internal factors. So GDP, current ratio, quick ratio, earnings per share, and the ARIMA parameters are significant, or they are significantly correlated with the change in the stock price. Okay, so what did we see in the regression? The regression shows us Intel's stock price is positively related to quick ratio and basic earnings per share, and this is really expected. Gradual inventory buildup, as reflected by the current ratio, negatively affected the stock price, and the change in the stock price is positively correlated with the change in the stock price 2 quarters ago. That is what the AR2 coefficient shows us. And unexpected stock price change 2 quarters ago due to various factors like market sentiment, news event, geopolitical events have a negative impact on the current price, and that is what is shown by a moving average 2 coefficient. So what these results tell us is that in addition to internal condition, other factors affected Intel's stock price. More specifically, the multi-variable regulation shows that macroeconomic and company-specific financial metrics play a role in the stock price fluctuation. It also shows a role played by, say, items like market sentiment, news, etc. So now, let us see what is expected product-wise in the future. So now, having reviewed the financial condition, let's see the future product development. So There are three areas. And the first area is like Intel is expected to launch two new CPUs in the future, yeah, starting 2025. And these CPUs are called Panther Lake and Clearwater Forest. Panther Lake is for desktop platforms, while Clearwater Forest targets servers. The next product is a Lunar Lake processor. It is a processor and it is designed for laptops. The other area of future expansion is in services area, and this is what is called Intel Foundry Services. So in this respect, in addition to being a chip producer, Intel plans to provide semiconductor manufacturing services to external customers. And this is like the same services that Taiwan Semiconductor Manufacturing Company is doing. And as I mentioned above, Taiwan Semiconductor Manufacturing is one of the rivals, competitors. So, having seen the financial trends and the expected product launch, what do we conclude about Intel's stock in the future? So let's see it like from short-term and long-term perspective. Yeah. In short term, decline in the stock price and earnings per share shows that the company faces a transitional challenge. While positive, the liquidity ratios, basically quick ratio and current ratio, indicate short-term financing issues because, despite they are positive, they are gradually declining, and that indicates that potential short-term financing issue. But I think this challenge may be mitigated by U.S. government's subsidy under the CHIPS Act, Chips and Science Act. Intel is expected to receive up to $7.86 billion under this act. Long-term positives: stable research and development spending, consistent capital expenditures, and low debt levels indicate that the company is resilient in the long term. In addition, Intel is qualified for 25% investment tax credit on qualifying capital spending. This is also coming from CHIPS and Science Act. It will also expected to receive about $11 billion in U.S. government loan for the semiconductor factories. The launching of the three new products indicates potential growth in the future profitability as well. Okay, so in general, we can conclude that while Intel faced a short-term financial challenge, it has a promising path for recovery and growth in the future. This means that it is a good company to invest in for long-term profit. Thank you for watching. Please send me feedback at alexfinancialinsight@gmail.com, and also please subscribe if you like this presentation.